Okay? Longer the line, the longer the drive. So now, market has now gone up. A lot of impulse. Everybody wanted to buy. Auction market theory. So they all agree that 810 is good. 810 is good. And in the thinking of if we were on the cattle range, I know one of our guys here is Scott. I'm not sure if Scott's on with us this morning. I'm going to beat him up if he's not with us. No, he's not on. So he owns a cattle, right? For instance, they bring cattle to the auction or a car auction. You guys see the car auctions on television, and you're getting this. And this is how it's actually reading if somebody was doing an auction. 810, 810, 810, 812, 812, 812, 812. Anybody buying at 816, 816, 816. Anybody buying at 812, 810. All right? 811, 811. How many times are going 811? And down 807, 807, 811, 811. Back and forth, back and forth, back and forth. And it's bidding 810, offering 810. Bidding 810, offering 810. Bidding offer 809, bidding 811. Bidding offer 9, or offering. Bidding, offering. Bidding, offering. You see? Everybody's in agreement right here. Everybody's right here in agreement. And then also, bang, it starts going. They hear 815, 815, 815, 821, and they start going up like an auction. So that's what's happening, is a crowd mentality, is everybody's trying to get on the side where everybody's starting to go. But if you think of this in the auction theory, where they're actually reading the prices, since it's going sideways like this, it's going like this. 8-9, 8-9, 8-10, 8-10, 8-9, 8-09, 8-11, 8-09, 8-11, 8-09, 8-11, 8-09, 8-11, 8-12, 8-12, 8-13, 13, 13. Everybody got 13, 13, 15, 15, 18, 19, 19, 19, 17. Do I hear 18? Do I get 18, 20, 20, 20? So it starts picking up. The volume starts picking up, and the auctioneer is going, do I hear 24, 24, 24, bid 24, 24, 24, offer 26, offer 26, offer 28, blah, 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 blah. Sold, okay? Right here, sold. But it's that crowd mentality. I can't really do it that fast, but become that crazy auctioneer, and it's driving the market up. And it comes into that resting period where the markets have broken out, and they all come and they rest. They all start selling, and then they're buying again, and now they're going back into the area of value until somebody says, I'll bid 35. And somebody says, okay, I'll sell it to you at 35. And somebody says, I'll bid at 30. Somebody says, I'll sell it to you at 30. And they start selling it, and before you know it, everybody's gone. Nobody wants to be there anymore. And they're trying to sell it. They're just selling it. Nobody wants to buy it, and they're just selling it. And they're back down to the prior auction price, that prior value where everybody was content with agreeing on the price. And once everybody agreed that this price down here was the bottom, you can't stop it from going up, because now everybody wants to be in. Everybody wants to be in. And most of the time, and so you see this, if you see the way the price action is here, everybody's not really so, they're buying and selling. But it's when you start to get a little bit too far that everybody wants to be in. Right? iMarkets Live went sideways for a while. And all of a sudden we started getting attention. Right? Or here, we started getting attention. Went for a year worth of attention. Growing, 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 growing. And all of a sudden it's like more. And all of a sudden now I'm getting calls from master distributors. I'm getting calls from company owners. All of a sudden all the big people come in. Everybody's to be in iMarkets Live. And at some point it's going to peak and go sideways. That's just normal. It's normal course of business on any instrument, any market, anywhere. So, you see what value is? Then you go back into what's called that sideways line.